What is going on YouTube? It's Brendan from Market Makers. Guys, are you excited for today's video? So many of you checked out that Bitcoin video I did. Really appreciate all the comments. Overwhelmingly positive. Happy to see there's an audience for stock market geometry, esoteric principles, and of course, harmonic vibration patterns. Guys, we're going to talk about in depth today Bitcoin as well as the Russell, and I'll explain why the Russell. I'll click through some of the other charts, the S&P, the NASDAQ, so you guys can see them, but we'll get to that in a minute. But what happened? I told you, right, and you guys knew this already, if that inflation number came in low, you're going to see a market reaction. And sure enough, it was, as of right now anyways, a whipsaw. Massive moves up in the market, in the equity space. Bitcoin's holding on a little bit better. Got our Bitcoin pump. This is why I was not shorting here. And of course, this is the first leg of what needs to happen. The follow through will happen tomorrow with Powell. Okay, so Powell's going to come out and give his presser, and he's going to announce the rate hike. The market's expecting 50 basis points. If he comes out, I'm telling you again, if he comes out with that 50 basis point hike and gives some type of measured response, such as, well, we're really happy with the progress on inflation, and we're going to keep at it. It's so important to us to keep at it and get inflation down to 2%. That's our goal. So we may have to raise rates longer or whatever. The market's not going to care about that last part. They're going to hear Powell's happy with inflation. They're going to assume a pivot's coming sooner. Remember, the market has this pivot priced in sometime next year. What I think's going to happen is they're going to continue to raise rates, get to like that benchmark 5% target. And when they realize inflation, assuming they don't cause a financial crisis in the meantime, when they realize inflation's not going to come down enough, I have it pegged out to 5-6% all through next year. They'll have to do a second wave of tightening. That's if the first wave doesn't cause some type of existential crisis in the market, credit market, bond market, stock market, something unforeseen, bank failures, whatever. So just keep all of that in mind, because tomorrow's a big day. If Powell comes out measured and he just does a 50 that's baked in, you could see the rally continue to the end of the year. But we got key resistance structures that must be defeated to hit some key targets. I saw already on YouTube, lots of the normal suspects are super bullish, throwing up 28K Bitcoin, 50K Bitcoin. Could we be going to 60K? They don't understand what's happening in the market cycle. You guys understand what's happening in the market cycle. That first quarter, Q1 next year, guys, I expect stocks to find a new low. March and September are typically sell-off months or bottoming months, and we haven't had to sell off yet. So really keen on seeing what happens as that progresses. But in the meantime, which is why we've been focusing on this upside, because inflation was due to come in low according to the Cleveland Fed, and now we got these pumps. Can these pumps last? Will these pumps just dump right back? Well, we're going to get into that in the charts, guys. And of course, this video is brought to you by BITGET to trade Bitcoin and the other cryptos on. Check out their information. Our link is in the video description. It helps support this channel. And we get to the equities, SimpleFX. The link in the video description, the special double bonus only available with our link in the video description, and you can trade the Russell on Simple. That's why many of us are there. Many of these exchanges don't allow you to trade the Russell. So definitely check them out. All that information in the video description, as well as our Discord. That sale ends in a couple weeks, guys. We have live streams. We just had a harmonic live stream today with one of our key traders in the room. Professional staff, fantastic community, 13,000 people on the Discord. Great education section. That link in the video description for the sale. Download Discord, click our link, and you're in the room. Let's jump into this. All right. So we have our Dante's Descent pattern that you guys really, like I said, great questions that were asked in the YouTube comments. Answered every single comment I believe that I saw up to and including today. Okay, so I try to answer everybody. I'm not like other YouTubers that just put stuff out there, don't care if you understand it or not. I'll try to always answer your questions as best I can in that little format. Of course, if you join our Discord, we can have full conversations. But let's look at this, because Law of Three pattern, guys. I took off that little box at the end for the 16 bar drop because it was confusing some some people, and I want to explain this really quickly, and we're going to get into some new information here, okay? So let's get my brush. Where'd you go, brush? Law of three. So we have the all-time high. We have our bottom. We have our top. We have our bottom. We have our top. We have our bottom right here. We're looking for our top. Okay, so that's the law of three. That 16 bar box that I had out here, remember, that's just a projection that I'm guessing basically from the current predictive pattern of the previous box. So that's a projection. This is saying wherever price is should be at a top January 3rd. The law of three pattern would be complete. That 16 bar downside, maybe it takes 30 bars to go to downside. Maybe it takes 24. That's not part of the pattern, but that is something that is predictive here in Dante's Descent. As you guys can see, this has been playing out beautifully. Now, I want to point out to you a couple of key things here. Okay, so we got to look at this. So let's go ahead and scroll up here a little bit. We have our volume. Now, it's important to understand, Gartley wrote his book, Profits in the Stock Market, back in 1935 when it was first published. He was selling that book for $1,500, which was the price of 3 brand new cars in 1935. So he wrote about this pattern in the market that's highly profitable, essentially what became known as the modern day Gartley pattern. But he wrote a lot about volume. And you guys hear me speak about this all the time, understanding volume divergence. That's because Dow, Wyckoff, Gartley, Gann, they all understood the necessity to have market participants in the environment to bid the price up. Okay, they understood the necessity for that. So what we're looking at here, as Gartley wrote, when we're looking at this sell-off, okay, you want to see increased volume in your sell-off. If you view this as the X, you see your A, B, C, D. If you view this as your X leg, you want to see increased volume for the sell-off. You got it. Now from your A to D leg, you want to see a decrease in volume, which you do as well, and specifically the CD leg, which obviously hasn't completely formed yet, you're seeing lower volumes. It's very important. Why is it important? You guys know from watching this channel, it's how you build volume divergence, right? You build volume divergence like this, and this predicts tops. So you want to see the volume stay low as price rises. And we're going to look at some of those lower targets that I had identified as well. Why are we focusing on that 23,103, guys? Because that is a harmonic vibration target. This is Kepler's triangles. This would be the ideal spot for a short if we come up here to a top, but we have levels underneath this, so we're going to look at that. But the volume is doing exactly what it's supposed to be doing, and now we need to get that volume divergent pump up to a key target. Gives us extra confluence for our potential short we will put on the marketplace, guys. Zooming into Dante's Descent, here's that 16 bar box, the bonus box, I guess you could view it like. I added on here, and of course the confluence with the 2 previous wave drops lands you beautifully at the 1618 at 10,753. Now the reason I'm showing you this, let's go ahead and zoom in a little bit so you can see this a little bit better. These ratios are very important. Geometry in the stock market, geometric trading, understanding harmonic vibrations of price. But you have the 1272 essentially here, the expansion of Kepler, and then you're looking at the contraction up here. And if you look at these lower targets, watch that 787, which is essentially 786, right? A Kepler number. If you come down to the 786 on that fib, that gives you what? Basically phi. Phi is 618. Phi is 1618, right? So this basically gives you the 618 ratio right here at 21,470. That is another target the rally could get to. Have to watch that level. Come down to the 618. Right? Come down to the 618, that gives you 486. Again, another Kepler number. Most of you probably have spot 5 on your fib retracement, as in 50% retracement. 46 is the Kepler number. Lands you right on the 618 at 20,187. Come down to the 486 here in the Kepler triangle. This gives you 382. Okay, you guys are familiar with these ratios, and this is showing you the symmetry in the marketplace, the geometric nature of the marketplace. Again, a living, breathing organism. So that's 19,179. So these are all valid targets. How do you know which target's going to be hit? It's not a dartboard, all right? The best target that you can get for me is that 100% retracement of this move. It provides market symmetry. It gives you the Kepler number, 786 being a key Kepler number, right on top of the 1 fib at 23,103. Okay, that's the key target, but we got to see if we can get to that target. Some of this, a lot of this is going to depend on the guidance and everything Powell gives tomorrow. Will he give fuel to the fire for the rally, or will he try to stomp it out? Okay, and if he does try to stomp it out, we want to see if this Santa Claus rally will continue into equities and drive the prices up, because today so far it's just been a big whipsaw. So that first level I'm really looking at here to pay attention to see if we're building a top, see if we're getting volume divergence. You guys know the normal confluences for when we're looking to trade: 19,179, 20,178, 21,470, and of course the 1 fib 23,103. Pay close attention to these levels. The harmonic nature of the Kepler triangles overlaid on top of each other tells you these are all key levels. The most key level, of course, being that 23,103. Let's go ahead and click through some Bitcoin charts on the daily. These key pivot points we got from the Dante's descent pattern, providing these nice drops. Guys, even the drops, remember this is the bifurcated box, right? Even the drops show symmetry, as you guys know from the sequencing that I showed you. But here's your first drop, 28%, right? Here's this last drop we traded, gave you guys a trade for. Look at the drop, okay? 27.99%. Even the drops have symmetry. The market will always move in patterns. So that next date is January 3rd. And if we just want to do a tighter fib retracement, right? Let's do a tighter fib retracement. People think fibs, some people still think fibs are hocus pocus. That's okay. But if we do a tighter fib retracement from this wave down to that base, look exactly where Bitcoin got to and got rejected, guys. I know it's just a coincidence, right? Fib trading is so much more powerful to me than just drawing boxes all over the place. Well, look at this level. Look at this level. There's candle cluster here. Here's a big box I'm going to draw around it. 382, 17, 767. Candle bodies below it. You obviously got above it. Here on the BITGET chart, you got the 17,980. Again, still bullish. More importantly, guys, what are we trying to do here on the daily time frame? We want to get out if we're going to stay bullish. Get a pullback, retest, right? Commonly called a retest in normal people's TA. And Wyckoff, this is a pullback, and we want a pivot out, the Livermore pivot, okay? So if we get this upward momentum, got to see what Powell's going to say. Other than what I've told you, that's just my observations. I obviously have no insider knowledge, but other than when Powell says something, if we get this, if we hold the levels and come back up, I'm going to be looking at this, okay? I'm going to be looking at this, see if we get some type of momentum up, possibly trading off of a trigger of breaking that previous breakout, okay? We got to see where that pullback is. And again, always being aware, guys. And we have traders in the room and members in the room that were taking trades this morning and caught this pump, okay? But always be aware that Bitcoin being so volatile, these can be violent moves. So, you know, in a perfect trade setup, we're going to pump out, pull back, and then whipsaw out of here, okay, in a pivot move. So let's look and see if we're getting more contraction, because this is important for a move, as you guys know. And we are starting to bottle up again, okay? We're bottling up on the daily time frame. Remember, this is going to cycle up. Volatility constricts in the smaller time frames, cycles up to the larger time frames, and then boom, you get an explosive move, right? You get an explosive move, and that's what we're looking for. If we go ahead and, let's look at the MFI really quickly while we're here. MFI is still in the bullish territory, riding this trend line. Not a lot of volume momentum. ATR, as you can see, is coming back down towards the median line. This is one of our beta indicators, an ATR oscillator. We're adding some other extra perks to it. This is going to be another indicator you do get when you join our room. All three of these will be indicators that you get when you join our room, guys. That's all included in the membership. So, and you get to keep those forever. And let's look at this on the weekly time frame. Remember what we're doing on the weekly, guys, just quite simply, trading down here in this defined channel. What we would be doing with that 23 number is literally just retesting the top of the Gann gradient. Okay, that's what we'd be doing, is retesting the top of the Gann gradient. Hopefully on that January third date and allow this pattern to continue to play out. So let's go ahead and keep clicking. If we're looking at the 8-hour time frame, you're seeing the bottling up happening more and more here. Look at this, just now starting to open up. Got this nice tight bottleneck, and as you guys can see, the caterpillar, this thing can expand, right? You can get some nice expansion, 28% move, and we're just starting to open up. So let's see what happens here. Again, got that 3D2, got your 200, 233 just above you here on the 8-hour time frame. Everything's kind of on pause again, waiting to see what Powell does. The market had its bloody move up, bloody move down, and we're going to get to that in just a second. But here on the 4-hour time frame, look at that constriction. I mean, this thing is hungry, right? This is hungry. So it wants to explode. So we got to see what Powell does, because we could have a nice follow-through move up. Big move up. Let me go ahead and turn this off, and let's look at a couple other things here on the 4-hour time frame. MFI obviously bullish, and you're just now starting to get your ATR a little bit elevated as well with that opening up. You are above the 200 and 233. Very, very key, guys. And of course, you look at this on the 1-hour time frame, really nice pump up, right? Came back down, could just be your backup here, a little pullback. Again, I don't trade in the 1 hour. I'm 4-hour, 8-hour, daily, weekly. But, you know, looking at the 1 hours is a really nice visualization of the pump as well. And why do we trade the Russell, guys? This is what I want to show you and talk about with you guys. A lot of people message me, hey, can you show some more stuff on the S&P? Can you show some more potential trade setups on the NASDAQ? None of this financial advice, as you guys know. This is all for your entertainment and education. But the reason I focus on the Russell, guys, look at the PE, okay? Remember, these are overvalued zombie companies. 25% to 33% of the Russell are companies that live off of debt. They don't make any money. So when you're looking at this, look at the Russell today is at almost an 80 price to earnings. A year ago, it was at 652. Tell me that's not a bubble. These are all those high-tech speculative companies that never made $1 in profit, but venture capital is pouring money, you know, meme stocks, all the different stuff. 652, and right now it's at 80. So, you know, if you look at the NASDAQ, it was at 35 and it's at 24. And the S&P is obviously at 19. It was at 28. Well, traditionally in recessions, I think the S&P, again, when I say recession, I mean run-of-the-mill vanilla recession. As you guys know, I'm expecting a financial crisis thrown in there as a baseline, okay? But run-of-the-mill vanilla recession, you're looking at the S&P at, you know, 12, 13, 14, down in that area. And that's going to be some market contraction for sure. There'll be trades in there for sure. Obviously, you throw in a financial crisis, that can come down into the single digits, maybe 9, maybe even 8, okay? It could come down a lot. But knowing that this could contract, let's just say 50%, you're going from 80. And if you think the Russell PE is going to be at 40 if there's a financial crisis, no, it's going to be like at 15. There's a lot more money to be made shorting garbage companies, okay? Think Peloton if you want to put it in a visualization. Think Peloton. Look at Coinbase. The stock is down 90%, okay? Stocks can go down a lot. And if you look at this on an indice level, this is where you want to be because it's volatile. It tracks closely with Bitcoin, not candle for candle. You guys have seen me go over it on this channel. Tracks very closely to Bitcoin, but the Russell, and you trade it on Simple, guys. This is like the easiest thing to do. Bitcoin and the Russell. 80% of my trades are Bitcoin and the Russell. The other 20% are a mixture of Forex and occasionally some altcoins, okay? But let's go ahead and look at the S&P really quickly because it is the broader market. Trend line still being respected. Lots of volatility today. And where'd you pump to? Just above the 50. Now remember, I have that one fib at 41.78, and that is still a target. And you got the 41.26 today, okay? So obviously that's a target. You pumped above the 50, got rejected. Again, the euphoria in the market died off pretty quickly. How long will it last? We shall have to see. And if you look at this, a trend-based fib and a closer projection, you pumped up to the 41.26 or just above it. Where'd you get to exactly? 41.41. Talk about symmetry there. 41.41 is where you pumped to, and now you're back down below the 200, 233. This will depend on what Powell does, right? Measured Powell, 50 basis points, or even a dovish pal, you're coming up. You're breaking out a Wyckoff potentially, and you have a top. And that top, we're going to look for that target as we see some more candle action. But right now, I mean, you hit the 786, you're below the 786, you're below the 1 fib. So you got rejected for right now. Lots of people in the room, by the way, were talking, they jumped in on these pumps, knowing and assuming that inflation was going to come in low. So looking at the Russell. Why do we focus on the Russell? Again, the volatility, guys, and the patterns that are presenting themselves on the Russell. I'm going to show you this on the daily, but quite simply, we can just look at the weekly here. You are above the 200, 233, getting rejected like a wet blanket by the 50 once again today. The Russell pumped up massively today. And if we just look at this from a fib retracement perspective, capturing that complete wave there, right? So if we look at that from a fib retracement, pumping up to the 486, essentially 1881. Notice this is not the exact low. You have a couple wicks here lower, but I'm looking at the wave, okay? The waveform trading is what I'm doing here. And looking at this, the 786 was wicked right here. So let's look at this on a daily and look at our patterns, because it's easier to see these on the daily. Now, we're looking at the Russell. Once again, looking at the volume. You see the volume here at the bottom. You have your sell-off, okay? Increase in volume, sell-off. You have the mitigation of volume going down, down, down. As you start to get your accumulation here at the base again, volume picks up. And then you have volume divergence once again. Let me see if I can get this to expand for you guys. Volume divergence that we've had this whole rally up, and you can see the volume down left to right, okay? The breakout of this rally all the way down. Look how negligible these candles got as you go sideways again in the market. Russell had a really nice candle today. This went up to 1890 today, okay? Basically where we've been taking short entries at all along here, right? Getting these nice trades that we've been talking about here and posting in the Discord, pumped all the way up here and came back down. Now let's look at some patterns on the Russell, some geometric patterns and some market symmetry. What I'm focusing on here, guys, is quite simply looking at that Gartley pattern, the way Gartley drew, just looking essentially at two pullbacks and an uptrend, right? This is what I'm looking at right here, two pullbacks and an uptrend. So I have my trend-based fib projection to show me where that 100% retracement is at 1939, getting a 100% retracement from this move. Visualizing this vis-a-vis triangles, let me show you this, would look something like this. And if we draw this way at the 786 or at the 1 fib where we're going to, 1272 is what we're looking at, be slightly right about there. Man, that's really hard to do with a trackball mouse. So what do you have again, guys? You have Kepler's triangles once again. Do you see this? So you have Kepler's triangles and this propulsion move up. That is at 1939, but let's get some confluence for that. I could take this previous wave here, but if I want to view this as an XABCD pattern, I would start over here, right? Where the wave really brought price down into the Wyckoff sideways trading range. This is the key wave because this brought you down to the new level where you're going sideways in Wyckoff accumulation, which could always flip to distribution. But let's go ahead and just get a fib retracement, get some confluence here as well. We'll take the high, go down to this wave low, and then look at this. Okay, so you have your 618 and your 1 fib. Again, 618, obviously key retracement, the most commonly retraced to fib in the Fibonacci series. And if you look at this, you're right on top of each other. This is what you want to see. This is going to be resistance to a rise, okay? So you have Kepler's triangles here. Now, does that mean you couldn't retrace at one of these earlier levels? Of course you could. And if you look at this, where the 618 overlaid here, right at 1882, 1885, and this is where you pumped to and got rejected. So you have strong resistance here. Let's get rid of that because it's really hard to see the numbers. You have strong resistance here where you got pumped up to and got rejected at that 618, 1882, 1885, and then your next strongest resistance I'm really looking at is that 1 fib, okay, because of the market symmetry. And if you look at this with Kepler's triangles once again using Kepler's measurements, and we just view this move like a giant triangle, and we come down, do that same base, not looking at that bear trap candle there, little scam wick candle, And if we put this up here, let's assume that we pump up to this level, okay, roughly 1939. So we can go a little bit higher because we had that confluence up there. I just want to get these numbers right about 786, okay? So you have Kepler 786, you have market contraction, and if we did fall down, which I anticipate we will, guys, you can start looking for targets if you understand the ratios in Kepler's triangle, if you understand Fibonacci, and we can get 1272. Let's try to get that. 1273, close enough. You look at your contraction move, your expansion move. Kepler's triangles laying on top of each other. If you want to check this with fibs, you take that same wave down here that you took from point B, put it up to your potential target that you'd be pumping to here at C, and misclicked on the candle, and pull that back up right there at point C. And look where your 1272 would take you to. 1558, okay? So you have your contraction move up, your expansion move down. You want to see your volume confluence for this as well. Volume is down left to right. You got your pump candle today. We'll see if we can move price up towards our target. That 1940, 1945 area is a key target. If we can flip this area we're getting rejected from, okay? That 1890-ish target. So this is what we're looking at. This is what we're tracking here on the Russell. And the reason I'm focusing again on the Russell is because target selection is key. There's more money to be made in the Russell as an index than there is in the other indices, because you will have that PE compression, meaning it will sell off more, and it's a garbage index. And when you have geometric patterns also forming on the Russell that are trackable and tradable, it makes it a higher value commodity for me to trade. Okay, so that's what I'm focusing on here, and of course we'll get more into that through other videos. Let's briefly go over the NASDAQ because people do want to see it, because people do trade it, and I understand that. So we can just take a simple fib retracement here. See, you pumped up to the 486 on the weekly time frame at 12,028. Got your wick above the 200, above the 233. Weekly 50 is coming down, and that's what you really want to watch. And right here in that corridor as well, that 786, 13,000. But you got to flip this. You got to have that. You got to have that dovish pal. You got to have the 50 basis points, and you got to look at your 618 here as well on the weekly at 12,463. Looking at this on the daily time frame, doing a trend-based fib to give you a different look at this. You hit your 618 at 12,086. And you have your 786 at 12,536 with your 200, 233. Key area to watch, guys. And again, the cap, if this thing got mega bullish, the way I'm looking at, and I'd have to go deeper into this to look for some Fibonacci confluence or some Kepler confluence, but you're looking at 13,111 is where I would guesstimate this could potentially get to, running into the Fibonacci fan at the 618, running into the 100% retracement from this move upwards, okay, giving you some market symmetry. But we will know when we have more candles. All right, guys, hope you enjoyed this video. I'll click through some commodities. Well, let's go ahead and do that really quickly because some of you are going to ask. So let's look at the commodities really quickly. A little bonus video here if you guys want to see this. So gold and silver are moving with equities as predicted, okay? So again, want to wait till tomorrow, get through tomorrow, see what our market direction is going to be based on POW. If we have continuation to the upside or downside, gold's at 1810. Silver, same story, guys. Silver's at 23.71, moving with the equities, and that's important to understand. Copper was requested. Let me throw that on here again. So copper at the 1 fib 3.89. You have your 200, 233 giving you a bearish pattern here, okay? We'll follow up on this. Volume is down left to right. Now, you guys enjoy your day. And yes, this is a Violent Femme shirt. People ask about it all the time. One of my top 3 favorite bands. Throw in New Order in there, maybe throw the Smiths in there, and that's the type of music that I love to listen to. Take care, everybody. Have a good night.